Hi and welcome to the Market Alert for Thursday, the 9th of February 2023. So US stocks declined as market focused on hawkish aspects of Fed commentary. US stocks declined amid a slew of Fed rhetoric in which markets cherry-picked the hawkish remarks. So it's interesting that we've got a change in sentiment over the last couple of days. Stocks dip as traders cherry-pick hawkish Fed. And this one, bears got thrown a lifeline as markets came down, but they're back up on the overnight. VIX exploding higher. We'll look at that as well. As far as the market alert is concerned, we look at the implied volatility. We'll do that in just a moment. News for today, monetary policy meeting. That's going to be at, just make sure this is correct, at 9:45. That's for the UK economic forecasts and unemployment claims. Not a lot around today. Just it'd be interesting to see what the monetary policy hearings gets leaked into the markets and how it reacts. But first, let's have a look at yesterday's markets. Kick off with the Dow, work our way through to the FTSE. And in the Dow, yesterday we have an inside bar. As can be seen here, the high and the low inside of the previous days. The market finding support at the 5-bar moving average and then moving higher overnight as well. Interesting developments overnight as well. But yesterday's session, the market moved higher, then traded down to the 200 MA, then bounced off this, came back to the close, went back to the DP, went through it, and then found support, became oversold, and then has moved up overnight. Big bar here. Let's have a look at this in the 5 minutes. This is actually, I thought it was a bad tick, but I've checked it with IG index as well, and it's on their chart as well. So I don't know what's happened overnight, unless both companies are reporting a bad tick there. But that's a big bar for the overnight. The market retracing there and down to the close and then bouncing off it. Like I say, I don't know whether it's genuine or not. You could have this across all MT4 platforms and it's still a bad tick because they all tend to use the same source. So we'll just have to wait and see unless it gets corrected. So yeah, 30-minute chart of the Dow, market currently sideways. In the German DAX, this also moving back up yesterday as well, and overnight. So you can see the market there at the 89. As the market is at a crucial point. That 89% retracement, if it holds, then you can see the market correct. It's the same on the downside. You get a market moving up, retraces around 78, 89, and then moves up. So we've got a potential there for a corrective move in this market, and also given that the implied volatility is moving back up as well, which we'll look at in just a moment. And in the 30-minute chart of the DAX, yesterday price is declining by about just under 100 points, then back up all the way sideways, then the Dow, followed the Dow back down to the 200 MA as well, and then up on the overnight. And the market was trading above yesterday's high, it's just back at it. Also, again, this is why I think this is not a bad tick, because if we look at the 5-minute chart also of the German DAX, you'll see that same price action as well. So something's obviously happened overnight and inside of yesterday's activity. There you'll see the market coming down to the DP, the purple line now, well, mauve line I should say. And there you've got demand, and then that retracement that I just spoke about, 89%, and back up to the BRN, managed to get through, but trades up to the R1, then back to the 200 MA, which it held at for quite some time yesterday. Did dip down, but managed to get back when the Dow opened, as you can see there, and then made its way back down following the Dow. And overnight, like I say, you've got that spike down and then back up, in the market currently just below the high of yesterday. It needs to get above this if it's to move higher. Failure to hold, we'll see the market then start to move lower. Let's have a look at the implied volatility before we look at the S&P. So this up yesterday, 1731, so up from the 1649. So there's certainly some pricing of options or repricing of options at the moment, just in case the market does decide to have a correction. Like I said, over the last few weeks as we've been looking into this, we are in the corrective phase area for implied volatility as a warning signal down in those levels of 13, 14, etc. And now we're starting to see the market move off this. And yeah, I mean, we're due a correction, aren't we? As we've spoken of before, the market's struggling to move higher as well in the Dow. So there is some indication there that we've got the potential for the market to put in some form of correction. In the S&P, like the Dow, we've got an inside bar for yesterday. Overnight, the market attempting to move slightly higher there. And again, you've got that price action in the stock market overnight where the market's been pushed down and then come back. Interesting bar, that is. The more I look at that, what actually happened, that they managed to bring the market back, or were they just shaking out the long stops? I don't know. But it's an interesting one. And yesterday for the S&P, market down, bounced for the first 30 minutes of the S&P official session, and then down. Then you've got your retracement and then back to the upside. FTSE put in a new all-time high yesterday of 7934. The insanity in this market with overvalued stocks is just insane, but 7934 nonetheless. The market starting to show a bit of a loss in momentum there as well, but attempting to move up overnight. And again, you can see yesterday that we put in the new all-time high in this area. There it is, 7934, and then we saw some profit taking coming into the market till we got the retracement, and then moved back up overnight, and now sitting above the DP. And we're only about 30 points away from the all-time high once more in the FTSE. GBP JPY sideways to higher there. Still a good range in the intraday. Yesterday managing just to stay in one direction and moving up 100 points there. And again, overnight we've got this in whatever the news is. The market is also showing it in the currencies as well, as the GBP JPY manages to just trade back to yesterday's high. In the pound, also moving back up now, as well as the dollar starts to weaken. As we have these fib retracement targets here. We've got the 50 EMA to get through first though, and in the 30 minutes you can see there that we had the market moving higher yesterday, 50 points, then it retraced 89, then traded down to the close, and also the 50 EMA before trading back up to Tuesday's high, before then moving back down, retracing, and then moving back up towards yesterday's high there. And in the US dollar yesterday, the market moving down, bringing a bit of relief to the metals markets and also to other currencies, up slightly in the last 30 minutes. In the daily chart, let's just have a quick look, and there you can see that we've got some bit of weakness coming in with red there in the candle down to the 5-bar moving average. If it breaks this, then we could see a retracement. We've just had a bit of a dead cat bounce in the US dollar over the last few days, and of course this has impacted the metals too. And in the silver market, sideways to higher, so we've got that demand, we're oversold, and we could have a move back to the upside to that 24 level, given that the dollar is starting to show a bit of weakness following its recent short covering squeeze or bounce, or dead cat bounce, whatever you want to call it, profit taking by the shorts. Market has resistance at 22.97, make that 23 with a 50 EMA there as well. Keep that in mind if you trade it. And also you can see there we've got resistance at 22.50 that we need to take out. Market's done well overnight, started to come back there. The high is just above. We've got the 200 MA and the high to get out of the way. Yesterday they moved the market down at the usual London fix there as well. Gold also starting to trend up a bit again. We got rising lows over the last few days, and demand coming in there as well. So that means that despite the volume being greater, the market hasn't sold off, it's held there, so somebody must be buying at these levels. All of the fibs for the upside are there, but keep an eye on that 50 and 20 bar moving average there. Also a bit of a double resistance there in any up move. Okay, that's it for this one. Let's see what the monetary policy meeting reveals today. Probably not a fat lot. And if the markets will recover from whatever happened overnight, and if anybody knows what happened overnight with that spike down in the currencies and in the stocks, then just let me know in the comments. Okay, that's it. As ever, thanks for watching. See you in the next one.